All right. Hello, all, and welcome back to Climate Finance and the Carbon Markets, the podcast from Hong Kong University of Science and Technology. I'm Charles Bedford, teaching this topic for this semester and also broadcasting out to whomever wants to listen to it on the web. Today, we are with Donna Lee, who is a principal at Calyx Global, which I will have her tell you about in a minute. And we're going to talk today about a couple of things. First of all, we're going to talk about Glasgow and where does the world go from the Glasgow meetings with the voluntary carbon market, and try to make a set of predictions which will all be wrong. It's just a question of how wrong they'll be about what the world looks like in 5 years on the voluntary carbon market front, or the carbon markets as a whole. So we'll do that, and then we'll break and we'll do another talk about projects itself and how the private sector can get involved in market solution to capturing and avoiding carbon around the world. So we'll do two chunks today with Donna, because she's got a lot to say and a lot of background. And with that, Donna, can you give us a little bit of an outline of your journey, the hero's journey, as they say, to where you are today as a principal in Calyx Capital or Calyx Global? I know it's a really interesting and unusual, probably unimitatable career path. So give us a sense of where you've been.
Yeah, thanks so much, Charles, for inviting me to your podcast. Really happy to be here. So I got started in climate change about 18 years ago, around 2004. I actually was an American diplomat. I had worked for the US State Department for a number of years. And in the final 6 or 7 years, I was representing the United States in a range of different types of negotiations, including on climate change, which I always tell people is a very bruising experience to represent the United States and the American people on climate change. Unfortunately, this country I call home is not always considered the most responsible partner and actor on climate change. Anyways, I had, after representing the US for about 5 years, this is the final 5 years of my career at State Department, I quit and became a consultant and worked for a number of companies, governments, nonprofits, philanthropies on climate change. So it's an issue that I care deeply about. I've been thinking about it and working on it for, again, about 18 years. And really in the last year saw the carbon markets exploding in a way that have not seen in the couple of decades that I've been working on this topic, and really wanted to think about if in fact all this money, people think billions of dollars of finance are going to come into this marketplace, can we increase the impact of that amount of money? Is there something that we can do to ensure that those funds are well spent? So that's why, together with Duncan Van Bergen, I think he was on a previous podcast of yours.
Yep.
We agreed to co-found Calyx Global, which maybe we'll talk about more in the next session.
Yeah. That is super. That's a great story. I don't think I've heard you tell that story before. I knew your background, but so you've essentially swapped the world of diplomacy, the world of international meetings, and world of policy to really focus on what's happening on the ground and how you can drive the funding, the financing that will come to climate change into the most impactful ways, which is super. I mean, what a terrific arc of a career. I'm so pleased for you. It sounds pretty exciting.
In some ways, it's more satisfying. And we can talk, you mentioned you wanted to talk about Glasgow. We can talk about that. But the world of diplomacy almost feels unreal, sometimes a bit absurd, than actually doing things that affect real people and can really make a difference in climate change. So yeah, I'm really excited to have made this shift.
not to veer too far off topic, but one of the threads that's come up with my students and with some of the guests on the podcast is that it does seem a little bit of the diplomatic, the policy sector seems almost a bit of a sideshow or a trailing indicator of where the world is actually going, and that the corporate action, the action on the ground in various jurisdictions is way ahead of the global diplomacy, partly because of the infirmity or the structure of the global governance systems, right? And that theme keeps coming up over and over again.
Yeah, I mean, in some ways, it's fascinating to sit in a room with 190 other countries or representatives from 190 other countries plus other countries and try to agree on something. There's so many different interests. It's hard enough to get 10 people to agree, much less 190 plus. So I think it's exciting. Like, I'm really glad to see the corporate world and private sector really coming to the forefront and steaming ahead of these global talks, because global talks are slow. It's very hard to get everyone to agree. And can you imagine representing the United States? I can be convinced about climate change and the action we need to take, but that's not what I can bring to the negotiations. I can only bring, as far as not just the American people, but, as a consensus, the American people. So that means every political party agreeing and moving forward. And so you have to represent sometimes a position that you might not personally feel is, appropriate, because there is a whole Congress that needs to move in the United States that is paralyzed. So yes, it's the politics of paralyzed, situation. And I'm so glad to see the private sector moving.
Yeah, and the private sector, to be fair, chunks of the U.S. and chunks of the world are moving forward based on their own assessment of the need to move this forward, whether or not you've got the rest of the world along. So, pretty exciting time. And the Americans have really only substantively probably sort of agreed to about one or two of the Montreal, Rio, Kyoto, Copenhagen, Paris, Glasgow agreements that they've sort of been at the table the whole way and driven a lot of it, but it's only really, I don't believe any of them have been actually ratified by the Senate as binding international treaties. So it's this kind of coalition of the willing that's evolved in the international sphere. Tell us a little bit about Glasgow and what was important that was decided there. What's your view in terms of the most important things that have come out of the Glasgow meeting?
Yeah, so I think the world was really focused on Article 6, right? And I don't know how familiar your students are with Article 6, but it's really the provisions for trading of emission reductions between countries, and setting up a system and a rule book, right, of how this can be done. This was one of the most contentious issues all along, ever since the Paris Agreement was agreed. This one article has been really tough because there's so many issues related to who and how can trade, right? Because whenever it comes down to finance flows, and this is all about, how this finance can move from country to country, it becomes hugely contentious in the negotiations. So whenever it's about money, everyone has a position, and it's really hard to come to an agreement. So interesting, as negotiators do, they always declare success, right? So the idea was Article 6, rulebook decided, everyone declares success because ostensibly, we have some agreement. But I think the reality, and I think what's really important to keep in mind is negotiations are very high level. The rule book is this really, 3,000, 10,000 foot agreement. And to actually get to the details of how that gets operationalized, that's going to take some more years. And so while we might think, oh, Article 6 is agreed, in reality, it's not. Like the details and how to actually implement this are not agreed. And not only that, countries have to do a lot to, to be able to actually engage in Article 6. So I think we're still some ways before we actually see it functioning. And I think that's important to remember, and why the voluntary carbon markets are so important, because people are getting on with it, right? And they're actually doing things. And maybe the last thing I'll say is that everyone had hoped that Article 6 will solve the issue about whether voluntary trading, not trading under official rules of the Paris Agreement, but this voluntary market is booming. And Article 6, Glasgow, the Conference of the Parties is silent on the voluntary markets, as they should be, because by definition, voluntary is outside of regulation, right?
Right, right. It's super interesting, and so essentially you're saying in Glasgow they agreed to have a market, a global market. They agreed to sort of set up some structures to go forward and think about how to do it, but they kind of kicked the can or postponed real decisions about how to really make that work. So and I think it goes back to your earlier point, which is it's hard to get 197 countries to agree on anything, but maybe just the general notion of it moving forward was enough.
And that was hard enough, right? And I think I don't want to underestimate what was decided. And so the outlines of this market are there, but to make it operational, just think about it. You need a body, a governing body. You need to create rules on what can be traded and how, and what are the parameters, what is considered a quality, transaction. So all those real details to actually make this operational are still TBD.
And so can you talk a little bit about that? So what does Article 6 anticipate in terms of that superstructure, and what are they trying to get at here? My understanding is it sort of creates this, or authorizes sort of a central overseeing body that will then essentially manage the transactions between country to country. So Switzerland buying credits, or buying essentially credits or other internationally transferable medication outcomes from Ghana or from the Congo, and that they'll manage that process. Is that right?
Yeah. So Article 6 has two major pieces within it that set up two different mechanisms in order to have these transactions. One is one that's you've described, Charles. That's very much like the clean development mechanism of the Kyoto Protocol, if your students are familiar with that, which is very much a body that oversees these transactions, that creates the credit, that logs the transaction. So that is basically the CDM, or the clean development mechanism, take two. I think now it will be called the sustainable development mechanism instead. But it also set up an option that is separate from that, in which countries themselves can just decide without the whole operation of this CDM-like body, right? So then Switzerland can just agree with Peru, which I think they have right now, some type of agreement of the conditions under which they can trade these emission reductions, or as you called it, it's the international, what is that? The ITMO.
ITMO.
Internationally
transferable mitigation outcome.
Yes, thank you. So that's the second option, which is much more flexible. I think one of the most active countries in thinking about and setting up their own system is the Japanese government, right, with the joint crediting mechanism. They have had many agreements with countries on how this could operate. So yes, there will be two pathways by which these transactions can be made.
So one is sort of through a central, and these are all we're talking about here, country to country essentially adjustments. One country's paying another one to reduce or sequester carbon because it's just harder for them to do it in the country that they're in. So Switzerland just has a very limited opportunities to, capture our carbon out of the air, mitigate carbon, and sort of they'll do what they can, put up solar panels, et cetera. But at some point, because it's a fairly carbon intensive country, they need to go out and find somebody else who will essentially grab carbon out of the air to compensate for what they're doing. So these mechanisms are essentially country to country mechanisms, either through it's the sustainable development mechanism now, or directly country to country. Is that
exactly? Yeah. Exactly, and hopefully it's not just because they have hard to abate emissions or because it's cheaper in another country, but just because it's part of ambition, right? It's I think that the developed North owes it to the global South because, we have to solve this problem. And so my hope is that it's just beyond, we need to find a cheap emission reduction to just increasing ambition. It's a contribution to tackling this challenge we face.
I mean, you know better than most how far morality goes in international relations and diplomacy. But I think what we're seeing, though, is the development of a market that can kind of drive those just outcomes, which is quite interesting. Now, the other thing that's happening, and the other thing that Article 6 kind of addresses, or sort of at least speaks a little bit to, is how does the corporate sector engage in this? And that's a little fuzzier, right? And even fuzzier than the country to country is the company to country or company to project developer market that has developed around the voluntary market. How does Article 6 kind of impact that, if at all?
It's a great question, Charles. I don't know. I don't think really, if you think about the Paris Agreement, it is an agreement between and among countries, right? It's not, it's one country, one vote. It's ideally through consensus. Companies aren't at the table. And so Article 6 isn't really about company action, right? It's about what countries are responsible for and what they can do, and about how the international transaction system will work, because hopefully every country will make a commitment, and they might, in order to meet that commitment, buy an emission reduction from another country. They might obligate their companies to buy these emission reductions. I mean, that's one way that companies might get involved, is if a country says, wow, the only way that we're going to meet this commitment is by creating a regulation on our corporate sector to reduce emissions, and then require them to go out and buy these credits, which is, of course, a nice way for a government to meet a commitment, right? Is to pass on the responsibility to the corporate sector. But that's how I see. I mean, in some ways, it's about government policy. That's what the Paris Agreement is about.
Yeah. And specific government policy. So governments can really decide how to treat corporate engagement in meeting their nationally determined contributions, right? I mean, so Peru, let's say Colombia, can say, all right, we're going to put a tax on all the fuel here, and if you want to buy fuel, you basically have to pay this extra tax, or you can fund mitigation and avoidance and carbon capture projects through the system they've set up. Kind of clever, right? I mean, it's a way to, instead of just having a carbon tax on all of society, you're essentially focusing the activity around those who are using the carbon intensive fuels at the point where they're using them, I guess. Is that, and countries can decide how to do that.
Yeah, I think Colombia is a great example of where a government is creating a policy to reduce emissions and does that through a carbon tax. But you're right. I think the Paris Agreement and Article 6 is really about the actions of governments and of countries. And then every government will take a decision in how then to implement that and whether and how to involve the corporate sector in doing so.
Now, I don't want to get too technical here, but can you give in 30 seconds or a minute the sort of the summarize the issues around double counting and double claiming? This is a terrible question, I know, especially constraining you to 30 seconds or a minute. But can you give us a little sense of how you think about double counting and double claiming and what the problem is?
Yeah, I mean, I think that there's a sense, and maybe fair enough, that every emission, like if you create a carbon credit out of an emission reduction, and somebody wants to use that it should only be claimed once, right? And that makes a lot of sense, because if we're going to maximize mitigation, right, and we really need to tackle this climate problem, we shouldn't have multiple companies, corporates, individuals claiming the same emission reduction and right. saying that I'm net zero or carbon neutral, and they're all claiming that same emission reduction. So I think there's a lot of wisdom in that, because then we get more mitigation, right? Like then companies have to go out and claim a unique emission reduction. But the whole thing got confused when countries had mitigation targets. So the United States has a target, and it will claim everything that happens across the entire country, right? Because a country's mitigation target is based on their greenhouse gas inventory, which includes what's happening across the entire country. So the US government's not going to be looking like, oh, that landowner just sold a sequestration credit and subtracted off of its books, right? It's just, it's not how these targets work. But there is a line of thought out there that should not happen, right? And I think this is a hugely controversial issue right now in the voluntary carbon markets, whether or not a corporate can buy a credit that a country is claiming, at a whole different level.
Yeah.
So I think that issue is such a hot topic.
Yeah. You sound a little bit like a climate negotiator, not wanting to take a serious controversial position on this.
I'm just yes, you're right. I'm avoiding the question. I'm just describing
That's okay.
The arguments that are out there. It's a tough one. It's a very tough one.
Yeah. So, I mean, double counting is really clear, right? I mean, that's a situation where you don't want to have Switzerland claiming the credit that they're buying from Peru, and Peru also claiming that credit. That's clear, right? I mean, Peru is basically saying we're doing enough here to mitigate and avoid carbon, and so we've got extra, and we can share and we can and sell into the market, and that's very clear, right? No country should claim the mitigation or capture of carbon that another country's claiming. What's trickier is companies, when companies so who gets to claim what country claim the reduction that is financed by a company? That's the tricky part, right? Do I get it right?
It's a really good point. And let me maybe add a couple of other thoughts to this. Like in some ways, that first situation you've talked about where there's an emission reduction, in Peru, Switzerland has bought that and counts it as part of its achievement, and Peru subtracts it, right? And Switzerland adds it. Now that system should stay whole. And the reason is because the Paris Agreement has this thing called the global stocktake, right? And that global stocktake adds up the claimed achievement of all countries. And every 5 years, it's a check, like, are we moving in the right direction in order to avoid dangerous climate change? So you don't want double claiming, because then you can't properly do the stocktake, right? Are we actually moving in the right direction? Yeah. So at that international level, yes, let's keep that addition and subtraction. Let's make sure that adds up correctly, right? underneath that is lots of activity by states and like California in the United States, by companies, by individuals. There's like all this stuff happening below it. I think it becomes really complicated when you want to start making these connections between this 30,000 foot, stock take and target setting and accounting and all the stuff that's happening on the ground.
Yeah. It's, I'm sure if you're in a company and trying to sort through what you should be doing, especially if you're in a multinational company with offices everywhere and kind of subsidiaries who are headquartered in different places, incorporated in different places, you're sort of bewildered by this whole process and trying to figure out, okay, well, how can I go out into the market and buy an offset that I don't get in trouble for? So that essentially becomes quite confusing for the corporate buyers, right?
It does, and quite honestly, at least in the near term, I don't think we should expect a corporate to get this, what's called a corresponding adjustment, right? That's a subtraction by Peru on its books.
Yeah.
Because frankly speaking, no government has a system in place yet for how to do that, when to do that, what are the rules under which to do that. You have to create a whole policy and regulations, and that's going to take time if in fact that's the direction of travel. If it is, I don't know. I can't imagine every transaction somebody having to go to the U.S. Environmental Protection Agency, knock on their door and ask for this corresponding adjustment thing.
Right.
Maybe someday there'll be a system in place. You can go online and order your corresponding adjustment. I don't know. Yeah. It'll take time, though. It's not something that I think will happen very quickly.
So, all right. So you've described fairly vague and broad set of Article 6 kind of rules that have been laid down at Glasgow. What's next? How does the world /UN FCCC decide? What's the next playbook here? Where do we go next to have this conversation? What's the timeline? How can we think about this?
Yeah, so I guess as we talked about, there's two pathways to these transactions under Article 6. And under the one that's centralized, that will set up rules, that will manage the process, like that needs to be set up. That's going to take some time. And I guess the Conference of the Parties will start thinking about all the things that need to happen, right, to set up that centralized system.
So that's
it would take some years.
Yeah, a couple of years.
Yes. At least a couple of years.
Crystal ball is a couple of years on that. So that's country to country. And in the meantime, does the company voluntary market kind of continue, and how does it evolve?
Yeah, so other than that centralized pathway, there's the country to country pathway, and we're seeing some bilateral relationships forming for that to happen. And then the third thing that you've mentioned is the voluntary carbon markets. Companies are kind of just getting on with it, right? And
they'll set their own tolerances, I guess, about what quality means, and it's a little bit self-regulated. I guess everything's a little bit self-regulated, isn't it?
I think it's a good thing. I think it's a good thing that companies are just getting on with it. They're not waiting, because the worst thing that could happen is that companies feel like, oh, somebody's telling me I need to somehow connect to one of these Article 6 things. And so I'm just going to wait. Yeah. Wait until this stuff is figured out. And then we lose 3, 4, 5 years of potential mitigation and action.
And that's a tragedy, really, to have that sort of delay, especially when all of these companies have made pledges that they need to hit net zero or better by 2025 or 2030. I mean, you can't really afford to sit around on the sidelines while the UN sort of figures this stuff out. You gotta move. You gotta move, right?
I would never advise anyone to hold their breath for the UN to take a decision or to.
That's a great That's a great final quote. No, don't hold your breath, folks. Just get on with it. That's Donna Lee from Calyx Global. Perfect finish to this podcast. Thank you, Donna. We'll take a break and we'll come back and talk a little bit more about projects and what those look like.